Welcome back to 13.5, the last section in chapter 13, and it's on insurance. Insurance can be a little bit confusing. I tried to provide some examples in there. By the way, it's Miss Roth again. Homework due Friday. You should have already read the chapter, but I'm going to give you some helpful information to help guide you. When I teach this lesson in class, I always want my students to think about, what does the word liability mean? What does it mean to be liable? I just copied and pasted. So liable means likely. Um, you did this, so this could happen. But when I'm talking about it for insurance, I want you to think about that if you are liable or liability, that means you're responsible for, okay? You're going to have to pay. So any type of insurance that says liability is going to pay someone else. It's not paying for you. It's paying for somebody else. And I will keep coming back to this as we talk about insurance. So just think about, to be liable is you're responsible for. You're responsible for someone else's damage or whatever. Okay? So insurance is something we all need to have, right? Every state has a financial responsibility law that's going to require you to prove that you can pay for damages you cause that result in death, injury, or property damage. So, what does that mean to you? That at minimum, you need to have liability insurance that pays for someone else. Okay? When we go shopping for insurance, there are a couple of words and there's a lot of vocabulary that we need to think of and we need to be aware of. First thing, when you buy insurance, you are going to pay a premium. The premium does not mean you're paying this enormous amount of money. It's not the premium. It's just what it's called. It's the specified amount of money for coverage over a specified amount of time. And all of this information is written on your policy, which is your contract between you, the insured, and the insurance company. It includes terms of conditions of your insurance and everything that you need to know for your insurance. So here's an example of my policy. So my policy, this is the cost breakdown for each of the cars that are in my household. And this is for 6 months of coverage. So notice, for 2 adults, 2 cars, $858 for 6 months worth of coverage. And we'll show a little bit more of that in a little bit. Okay. You need to look over the figure on page 267 and 268. Okay. Realize there are 2 different kinds of insurance that are going to cover you. First of all, there's collision insurance. Collision insurance is going to cover you when? Oh, when you're in a collision, you're at fault. This is what is going to pay for. Anything outside of a collision is going to be our comprehensive insurance. So I always think of comprehensive as all encompassing. So a tree falls on your car. Someone breaks into your car. Now, if someone breaks into your car in your driveway, in your garage, that's not going to be your comprehensive. You know what that's going to be? Your homeowner's insurance. Okay, so there are different things that cover different things. It's why a lot of people choose to bundle all their insurance into one company so that the company can work out where it comes from. But your big things to think about, you have liability that's going to pay for someone else, collision paying for your car damages, and comprehensive if it's not the result of if it's not the result of an actual collision, That's what comprehensive is going to cover. Um, there are different kinds. We just said liability insurance, other people, collision is going to pay the cost of your repair or replacement of your vehicle minus the deductible. Okay. So we pay a premium. That is the total cost of your insurance. Then we have a deductible, which is the amount you agree to pay toward the repair or replacement of your vehicle. Okay. So that deductible can be $1,000, $750, $500. Sometimes it's zero. If you look at those commercials, they're all telling you that you can get a vanishing deductible and different things like that. But the example of that, so there's $10,000 worth of damage. You have a $500 deductible. So you have to pay the $500, and then your insurance company is going to pay the $9,500 towards the repair of your car. Okay. Your comprehensive, again, damage not caused by a collision. Now, I want to note insurance is more and less expensive depending on the state that you live in. And just know that Illinois is number 37 on the list. I like to mention that. 37 out of 51, just so you know. Insurance rates are determined by a lot of things. Okay. First of all, you have these really smart people called actuaries. Anybody have an actuary in your family? Actuaries sit and they analyze statistics and they group people into risk categories based on a number of things. So first, obviously, there's driving record. Drivers with a lot of convictions, a lot of moving violations, a lot of collisions, they're going to pay higher premiums. Okay. Age. Sorry, teens, you're real high to insure. Now, your parents are probably going to put you on a policy that they've already got. They may or may not. If you're not getting your own car, then, it's still high to insure a younger person. And for females, you're going to see in a minute here, gender plays a big role along with age. You know what? I'll talk about that in a minute. Miles driven. Now, I just read an article because of this pandemic where people are not driving. Insurance companies are actually refunding people millions of dollars right now because their mileage is going down. Okay. Sometimes our mileage gets assessed and realize that if you go get your car serviced, everything is reported in a big database as to how many miles you really drive. So don't try to tell them you drive 3,000 miles a year when really you're driving more of the average, which is 12 to 15,000 miles a year. They know. Okay. Here's where I'm combining that age and that gender. So sorry, males, your insurance is higher. Though statistically, they say teenage females and teenage males are equally risky, males are always going to be higher. So females at 26, their insurance automatically comes down. Males, their insurance is not going to go down until they're 30 and married. I know, it's terrible, but that's how insurance is going to work. Okay. And they say males, once they're married, they take less risks. So that's why your marital status is going to come into play. Females, the marital status doesn't matter as much, but males for sure. At 30, it's not going down unless you are married. Okay. Type of vehicle, sports cars, vans, sport utility, things that are stolen, vandalized, often cost more to repair. Those are going to have higher premiums. Address. If you have a Chicago address, it's going to be a couple $100 more than if you have an Oak Park address. I know a lot of people that may live in the city and still claim that they live in the suburbs with their parents to get lower rates, which probably, it happens. And then the claim record, higher, more frequent claims, especially comprehensive and collision, meaning, well, collision, we already know, means you're at fault, is going to result in a higher premium. Okay. Sometimes the insurance company, you can't see this, sometimes your insurance company will cancel your policy. That's where you see the 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 alcohol, people who get DUIs, anything like that, they sometimes get booted off their insurance, but yet they still need to get high risk insurance that costs a lot more than the average bird. That's why they'll talk about it on the commercials that, oh, low down payment, blah, 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 blah. So we pay in my household $1,600, $1,700 for the whole year. They're going to pay double that just to have liability insurance, which is all that's legally required to have. So your claim record. That's something to talk to your parents about, because I know when I was younger, if I gotten any sort of minor thing or hit a fence or something random like that, the rule in my house was if it's less than $1,000, then we're just going to go pay and get it fixed. So it's not on the claim record. Realize there are ways to get reduced premiums. Okay. Oh, it's not showing. So the way to get reduced premiums could be low risk drivers. Okay. Low risk drivers, premiums are reduced for drivers who have maintained good grades in school. Yes, when I was in college, I had to fax because faxes were real and they still are real, but usually we just transmit over the computer. But I had to fax my report card to our insurance agency every semester so I can get a reduced premium. Okay. No claims, convictions for 3 years. And if you have vehicles with certain safety devices, airbags, anti-theft devices, especially those anti-theft devices. Okay, and then I wanted to just show you a quick example of ours and what it is. So you see on the top, the first thing that I need is liability insurance. And you see also that that is going to cost the most in an insurance premium. And then you see comprehensive has a pretty low deductible, $250, and collision with the $500 deductible is also very expensive. Those two things go down as your car ages because they're not going to replace it and what you need to do. So the Ford Explorer is $413, and then we've got the Sienna with the same kind of coverage, but it's $14 cheaper on the Sienna. Why? Who knows? And then you can see that there are the discounts that are applied. So we have continuous insurance, we have homeowner insurance, we have our car and our home together. So we have 3 cars. We pay it in full for 6 months. It's paperless, 3-year safe driving. And there are some other discounts that come into play as we go into more and more. But that's pretty much all I have for you guys. I hope you've liked this format a little bit with separating it into sections. Enjoy and get your homework done by Friday. And thanks for listening. Have a wonderful day.